Welcome back, traders, to Impact Trading Services Weekly Recap. Come over to youtube.com, Impact Trading Services. Click on the playlist. Scroll down to Gold Weekly Analysis, Supply and Demand Support and Resistance. Click on that playlist. Then in the menu, come find the playlist that you want to review. Today we are reviewing the week of Monday, January 30th to Friday, February 3rd. If you're using TradingView charts, we've added some weekly, monthly, daily breaks. These blue lines, in between the blue lines will be the day, so you can see a daily high, daily low. This is the start of the week, so you'll be able to see weekly highs, weekly lows, and this is the start of the month, monthly highs, monthly lows. So that'll give you more of a guide through the week. We've also added some resources. We've been posting in Forex Factory, which has been around for a long time. If you want to come over to our post and learn from all these other posts and great information at Forex Factory, come over and do that. Another great resource in the foreign exchange community is forexpeacearmy.com. You have forexfactory.com, forexpeacearmy.com. Come over and look at the post that we posted in these forums, and then also learn from a lot of other traders so that you can see many different trading styles. Just learn and become consistently profitable, and then add your ideas and learn from the other traders in these forums. Great resources if you want to be a professional fund manager and a professional Forex trader. At the beginning of the week, we posted in Forex Factory and Forex Peace Army prices testing the level of 1920, what to expect from here. A false breakout short from 1920. The price continues to trend to 1950 to 2000, or a real breakout and a retest of 1920 as new resistance. Then price moves lower to retest the 1900, 1910 area. So price actually did go retest the 1900, 1910 area. And just so you understand that we did this analysis at the beginning of the week. Price did go retest the new resistance of 1900, 1910, and then move on trend continuation. We posted a midweek update in both of these forums that gold found support at 1900 during the London session on Tuesday. So from the beginning, we said 1900, 1910 for the week, and price did that to the pip. Gold found support from 1900 on Tuesday. So Tuesday was the midweek update, and just so you understand how powerful supply and demand support resistance is, gold was going to find support at 1900 because that's what the institutions, all the traders around the world, started placing orders at 1900. That's the only reason why gold found support at 1900 is because of orders in the market. So the demand orders for 1900 for gold were found at 1900, and that was already on the charts. Now let's go over to the charts so that we can see how this week started played out. This is Monday. Monday right here for our trade plan. We knew this area was going to either break, retest, and then move up to 1920, or we knew price was going to break 1920 and then find support between 1910 1900 for then the push up to the 1950 2000 area. So that was our trade plan at the beginning of the week, and we already drew our trade levels. So now let's look at the trade, the intraday and the swing and the position trades. Our first trade signal came on the hour during the Asian session. That's 1,000 pips for your first trade signal for an intraday trader. For the swing trader, you would have been holding this level, booking profits, getting some profits out of the market here, and then you would have placed your stop losses here for your first trade based on this hourly signal here. First trade, 1,000 pips to 3,000 pips. Now, swing traders can trade these levels also. The 1930 level is also a level of once price broke down, the 1930 level became a level of resistance. So that price comes down to support to test support of 1900. All right, second trade of the week. Your second trade of the week came here at the support level of 1900. We wanted to see if price was going to break 1900 for a further downtrend trade, or if price was going to find support here at 1900 to move up to the 2000 area. And in the post, we said between the 1950, 1960 area during the week, up to 2000. And then our midweek update, we said gold found support at 1900, and we posted this on Wednesday. We said gold found support at 1900. It's now consolidating between 1950 and 1960. Gold found support at 1900. And then we said our trade plan will be to wait until price pushes into the 1960 area, 1960-2000 area, because we didn't know if price wanted to break 1960, but we knew we were at an area where there was a lot of supply and a lot of resistance. And then we wanted to wait to see what price was going to do with price action confirmation. And then we were planning for a pullback of 2,000 to 6,000 pips. All right, let's go see what price did when price entered that area. All right, to the pip on the hourly chart, we're already starting to get wicks. We already see wicks on Thursday, wick, but price wasn't breaking down. And then in the London session, we see more wicks. And then we get this bar right here, which indicates that 1960 is going to hold. We get an hourly hammer with a wick. And then we get a bearish bar hourly signal. So that's 1, 2, 3, 4, 5, a 5-hour signal of price telling us price wants to go down in this next session coming up for the New York session. So on the month, this is how price looked on the month at 1960. Right to the pip at 1960 on the month, we get a 9,800 pip pullback. We planned for 2,000 to 6,000 pips. 2,000 to 6,000 pips allows you to earn a great living should you follow your trade plan. So that's how powerful knowing your supply and demand, support and resistance areas are. This is on the month and this is on the week, 1960. Now, how did we know that? How did we know that? Let's go back to the monthly chart. The area of 1960 was tested 1 time, 2 times, 3 times, 4 times in the following years. So November 2020, January 2021, February 2022, and then again here in February 2023. So we know that the institutional traders, the market movers and the market makers already have the orders placed here. And when you know that, you can start trading with the institutional traders, and this is how it looks on the weekly chart. Test of the 1960, 1970 area, 1960. So this was a from October of last year to February of this year. Price rose 35,000 pips. So the institutions are saying, well, it's time for us to profit. So a lot of profit taking happens in these areas, along with new positions of institutions that want to drive the price down and start taking profits down here. And this is how this looked on the daily chart. All right, let's review some trades, and then we'll start the analysis for next week. All right, price came down. This was your intraday and weekly trades. Now again, your intraday trades from 1960, you can plan trades up and down from 1960 to 1950. That's 800 pips for you to plan trades, intraday trades, 800 pips. You know your levels of support and resistance. These are just larger levels of support and resistance. But price, even on the hourly intraday session, has support and resistance. And we'll quickly take a look at how that looks on an intraday chart. If you wanted to trade these levels intraday, then you could have traded from 1950 up to 1960 one time, two times, and then plan your longer term trade down from here, because intraday traders are looking to trade for a couple of hours on the intraday swings. So you knew the Asian session has usually 3 swings. That's 800 pips for the Asian session. And then we get price action confirmation. That's another 500 pips for your intraday traders. And then you can see this pattern forming. You have a head and shoulder, you have a rounded top, and then you can start planning for the larger move, 1960 corporate move, corporate institutional traders to push the price back down. All right, so those were your trade levels. We will start planning for this week for the 1960 area of support. Either the support's going to hold, or we may get a larger pullback. So we'll have another analysis for you coming up here. Now again, this is a large move. Of almost 10,000 pips, and if you look at the monthly ranges right now are close to that. So we may get a move down into these levels here, and then we'll post another video for our weekly plan as we can follow the story of price through these levels here. All right, be a consistently profitable trader. Now again, just so you understand, this one move here, if you had the patience and you traded your plan, this one move here with a micro lot would have given you 980 pips. That's $900 just with one micro lot. And the risk you could have risked $100 and traded the longer term trade plan for $900. So your risk reward ratio is way over 3 to 1. And depending on your account size, you could have risked, even on smaller accounts, less than 1% of your account and planned this trade right here, and you would have made almost $1,000 just with one micro lot. All right, we will have another video coming up for you to do the week of February 6th through February 10th. Plan your trades, plan your trade entries, plan your stop losses, plan your profit targets. Become a consistently profitable trader. Then come over and look at the resources at Forex Factory. Look at the resources at Forex Peace Army. We'll post where we post in this forum. There's a lot of great knowledge here for you to become a consistently profitable trader and earn a living. See you in the next video.